Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Friday, November 21st, and my name is Raleigh White, and I'm coming to you live from kind of a cloudy, overcast day here in Austin, still keeping our fingers crossed that we might get some rain because we never argue with rain here in Central Texas. Anyway, folks, I am your moderator today, and in today's session, Roger's going to be covering a range of important topics with a continuing focus on the process that he uses for generating pit trades. Now, what he's going to be doing today is building on yesterday's presentation, that walkthrough that he did, the routine that he goes through as he looks at and refines the stocks that he wants to trade. He's then going to spend some time with us and tell us when he decides to look at a debit spread versus taking a normal call or a put. He's also going to share how he decides to swing or day trade an entry. And then he's going to tell us when volume figures into his selection process. He's also going to share with us how he sets up his best profit targets. And as a special bonus, he's going to review some of the recent pit trades that have been taken, and we're going to hunt for some new ones live and in real time. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address those periodically throughout the session so as to not interfere with Roger's presentation. Now, also remember, folks, that I've opened the chat to everyone and we do have some ground rules. If you're going to be posting, always be kind and be supportive. Keep to the topic. There are no political discussions allowed whatsoever. And also, folks, please keep your side conversations to a bare minimum so that the rest of us can focus on the education and information that Roger's going to be sharing. Because as you know, folks, he's a busy guy and he's coming on, spending time with us to help give us an edge in the markets and to help us all become a lot more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock in the morning Eastern Time for Roger's pre-market briefing, you note that there were several catalysts on tap that we needed to be aware of. In the chip sector, we noted that NVIDIA was down 1% and AMD was down 1%. On the consumer front, however, we saw that Ross stores were up 2% and Gap was up 4%. On the infotech side, Intuit was coming into the open plus 3%. And on the Fed side, guess what, folks? We have 6 Fed speakers on tap for today. Several have already spoken, okay? And then we had Flash Manufacturing and Service PMA coming out and the University of Michigan Consumer Sentiment. Now, for those of you that are wondering, why do we even talk about catalysts and why are we even listing it here? Because from Roger's perspective, it's important to know about critical information that is either known or will be known during today's trading session, but it's not yet priced into the market. And so from that perspective, each one of these chips, consumer sector, tech, Fed, you need to be aware of those because these are volatile flashpoints. And you just need to be aware of what's going on there as you consider taking trades on stocks that might be a part of all that. That's the critical value of catalysts coming in to the open. Now, as far as today's small cap watch list is concerned, there were only 2 tickers that surfaced that Roger was interested in looking at. IVDA above $1.15 and IKT above $1.85. So let me go to my charts here and let's see how these 2 particular small stocks have performed today. Now, the small stocks that I'm talking about are all the way on the left-hand side. In the upper left-hand corner, we see IVDA. Now, the pre-market high coming into the open was right here at $1.15. And on this first opening candle, by the way, these are 15-minute charts. So, in this first opening candle, you can see we broke through this level, would have been given a fill. At that point in time, I established a 15% profit target and a 15% stop loss. Unfortunately, we only went up about 3 cents and then turned right around and would have been stopped out. So we did get a hit here, but it did not perform the way we liked it. And the way I track these folks, this is a loss. In the lower left-hand corner, we have IKT, and the pre-market high here was $1.83. It opened up right here around $1.60 or so, and it's just really been chopping sideways and hasn't made any move whatsoever into this level. So let's go back to my normal charts here, my normal presentation. And before I leave the small caps, I want to let you know that Roger's selection process is pretty straightforward. Not only does he look for price action, but the most important factor in deciding whether or not to look at a small cap is its volume. He is looking at extreme volume in pre-market trading. We're talking about volume that's about 100 times what its normal trading volume is. You also need to be aware of the fact that, small caps are their own animal. Okay, they're not impacted by the things that impact the larger market, largely because institutions aren't investing anything into small caps. All that activity, all that volume is coming from retail traders like ourselves. Also, folks, if you consider trading any of these small caps, wait until the normal market hours to do so. And if you don't have a fill by 2 p.m. Eastern time, take the trading off, okay? And by the way, if you do, by any means of imagination, if you do get filled on one of these small cap trades, do not hold them overnight. It is not worth the risk to do that. Now, as far as Rogers' large stocks are concerned, we note that there were several that he is looking at. On his short list, he has BMNR, HIMS, Netflix, MSTR, CMCSA, VICI, and RBLX. What's interesting about the shorts here, there were about 4 other tickers that he was looking at, but he basically took them off because he said, guys, look, these things are already, very, very low. They're trading below the 200 moving average. And so from that standpoint, I don't want to consider them. So his point is that shorts are extremely low, potentially even overextended. So be careful from that perspective. On the long front, there were 8 longs he was looking at. You can see them here: Google, GH, TJ Maxx, TRV, HIG, CSTL, Walmart, and COR. So once again, these are all on his watch list. And what this means is that if Roger, and he explained this yesterday and he'll do it today, if any of these that are on his watch list basically meet the criteria that he's looking for example, is it bouncing off of a specific level, or is it moving into an area, or where is it with regard to the VWAP, etc., more than likely that's going to be a trade that he takes, and he'll issue that either in the trading pit or in one of his other premium services. Now, as far as Roger's closing comments were concerned, he said, look, guys, we look at the futures. They were up into the open. As a matter of fact, they were down pretty sharply, but right there around 7:30, they gave a bounce up, and we were all wondering, what happened? What's going on there? Well, FOMC Williams was speaking at the time, and he basically came out and said he is in favor of a rate cut in December. Now, he's just one of the FOMC members there, but that certainly gave the markets a bounce, and so we were moving higher coming into the open. However, he did note, folks, that the bonds were low in their range. Once again, they're still hanging there low in their range above a critical area of support, and the VIX was still up above 25. So we're in fear territory when we're at 25. He also noted that the put to call ratio was favoring puts, and that 574 companies were at 20-day lows. He also noted that the SPY and the RSP, the QQQ, and the QQEE were all below the 100 moving average. And furthermore, only 48% of all the companies that make up the S&P 500 were above the 200-day moving average, and only 46% of the Russell 3000 were above the 200 average. This is important because in Roger's opinion, when that percentage gets below 50%, he says, folks, we are looking at bear territory. Now, all that being said, Roger's not saying don't panic, Don't jump out of your window. Don't sell everything. Don't go crazy because we have been drifting lower for some time. This is a correction that some people might even argue is healthy. And as a matter of fact, to Roger's point, he feels we're at the point now, technically, where he's expecting or he's hoping to see a bounce. And he gave us some of the criteria that he was looking for in that regard, and he'll share those with us. So, folks, we're so glad that you're here today. We have a terrific agenda on tap. Roger's going to continue to talk about his process for how he gets ready to find trades to place in the pit. He's going to talk about when he likes taking a debit spread versus normal calls and puts. He's going to share with us how he decides whether or not to swing trade or to day trade a particular stock. He's going to also tell us when volume figures pretty highly in his selection process, how he finds the best profit targets. And as a bonus, we're going to review the pit trades recently and maybe hunt for some new ones here live and in person. Now, once again, guys, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone and we do have some ground rules. If you're posting, always be kind and supportive. Keep to the topic. No political discussions are allowed whatsoever. And also, please keep your side conversations to a minimum and focus on the education and the information that Roger's sharing because, guys, he's taking time out of his day to give us edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's say hi to the team. Roger, good morning. How are you doing? Matt, how are you doing, my friend?
Doing great, doing great. I hope everybody's doing great. How are you doing today?
Man, I am doing just fine, Roger. It's a great day. I'm looking forward to the weekend. A lot of planning for Thanksgiving because I have a huge family reunion. We're going to have
Oh,
like how many people are we going to have here? We're going to have almost 30 people here for
wow.
Thanksgiving. And my wife and I we provide like the turkey and the ham and things of that, and everybody else brings sides. But they're flying in from all over the country, and even Cam's going to be joining us from
Oh,
Albuquerque. And
good.
so a lot of planning to get ready for next week. But setting that aside, once again, that's a lot of fun. But my gosh, Roger, these markets are interesting, aren't they? I mean, I know that's kind of a loaded, very broad word, but watching what was going on this morning and listening to the caveats that you gave us today, you were pretty much spot on, as to what's going on. And things are bouncing around. And your point was,
Yeah.
folks, be careful. Keep that fear of missing out totally in check. Wait for the market to declare what it's going to do. So with that, and Roger, just as an update on the small caps, there were two that you gave us, and IVDA did in fact hit its target. It went up about 3% and then just nosedive. So we got a hit, but I tracked that as a losing trade when it moved against us about 15%.
Yeah.
But that's the update with regard to the small caps. And once again, any surprises, anything that you'd like to share with us as we kick things off?
No, no real surprises, and I'll tell you why. Let me just take and this is a good folks, this is a good lesson for you what I'm going to show you right now. Let me just share my screen here. Real quick, if you haven't seen what Mia's doing, this is my cat Mia. She's sleeping. She's in Hawaii right now. You could see her right there. That's what I'll be doing. That's what I'll be doing tomorrow morning.
That's what I'm
But
going to be doing after turkey dinner.
there you go. Right, right. Of course, of course. Okay, so here is this is what gave us a lot of clues. And I was actually broadcasting this today in the morning, but I was telling people up when we opened up, remember what I was talking about and what I was looking at? I was looking at a bounce from the 100-day moving average right here. Because we closed right here at the 100-day. So the question is, are we going to break the 100-day or are we going to bounce? There were several clues that said we were going to bounce, and I talked about that in the morning update as well, very extensively. But I also said it's got to happen pretty quickly. If it
Mhm.
doesn't start happening pretty quickly, and when I say quickly, I mean 48 hours. I don't mean instantly. 48 hours. The less time it takes to reach that 60% correction, and that 60% correction would put us above the 8-day EMA again. Okay, so this is good. This is really, really positive. I like what I'm seeing here. But when the market was going down today, when we were breaking down, this is today right here. So this happened when I want to show you guys something, and I want to show you the power of using market internals. This happened around, so we were going down around 10:30, 10:40 till about 11. So between 10:30 and 11 o'clock, we were going down, right? Okay, now let me just move that to the side here. Look at look at ADD. Look where ADD was at that time as we were breaking the low. We were positive 500. We weren't down here. We
Mm,
weren't negative 1,000 or anything like that. Which basically the market was breaking down, or if you want to, well, if you want to call this a breakdown, right? I mean, not really a break, but if you want to call this a breakdown from this crap right here, this is what would have suckered folks to go short today. Okay, this right here. This is the only bar right here. Okay. And I was saying, be careful, but at the same time, I'm not really seeing a prolonged selling pressure because ADD is not, it's not falling. It's not doing any of that. Now, VIX wasn't going up, but it was staying near the high. So that was a big question mark. But again, the ADD told us there's not much selling pressure. And look at tick today. See how the lows are getting higher?
hmm
The lows are getting higher, and obviously Volt broke out to the upside. So there's definitely buyers coming in, and now ADD is at 1500, which is really strong to the upside. So this tells me that there's a very low risk. There's a very, very, there's a very, okay. There's not a lot of downside right now because
Okay.
look at how good we're bouncing right here.
Right.
Now
Yeah.
everything is pointing to a bounce. But the big giveaway was the biggest giveaway was, and I want to show you guys because I talked about it this morning. So I want to break this down for you and show you what it is real quick. I told you this morning, just a few hours ago, before the market opened, we were at 574 stocks.
That's right.
And I said, I don't expect that to stay that way. I would expect it if the market bounces, I expect this to go up to about 100, 200. I did say that a couple hours ago. I
hmm
did. I did. I did. Well, we're at 173 right now. We
Man,
went from 574 stocks making a 1 month low to 173.
273.
And the upside, we went from 53 stocks making a 1 month high to 129.
Okay.
So you could see momentum. They're not all that unbalanced right now. There's not that much imbalance here. And as you can see here, volatility has been broke this level right here, which is, broke that level, and now we're at a major support level for volatility right here, by the way. Right there, right at 23. But honestly, market internals are really strong. I would be something would have to happen right now. Like there would have to be some fundamental news. Something would have to happen right now for this market to turn bearish once again. You got too much strength coming in, too much non and also let me tell you something else. Look at when the strength began. Not at 9 o'clock in the morning, at 11:30, when markets get sleepy on a Friday.
hmm
That's all. These are very positive signs. Very, 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 very positive signs. And again, this is what kept me from going short today. Stocks right here, the ADD. And, you know, again, it's one thing talking about this in hindsight, but I want to show you these are some comments that I was making in the here. This is the Trading Zone Live where Matt and I are using this. Now, we haven't given any trades yet, as far as I know. I don't know. Matt
No.
is pretty sneaky. So look at 1039. Okay, Bold is fairly bearish, but ADD is. This is when Vold was right here. This is when Vold was right here. This is a 10. This is when that. This is during that time when we were breaking down right here. See 1039. Remember, I said the breakdown occurred between 10:30 and 11 o'clock.
Yes.
So here's my comp. ADD is positive 600, but I don't like the VIX being near yesterday's high. I want Matt to wait to see if the downside move has legs or if it's a false move. False moves don't last long, so we will know sooner than later. Okay? But you see, but ADD is positive 600. It's right here, 1039, right there, right there. So you can't say I didn't say it. I did. I did. I did. And I specifically said, I want Matt to wait. Wait. I don't want him to go short right here. This is 1039. This is right here. Right here. Here's 1039 right here. Okay? Right when I said it. This isn't I don't like the Monday back. It's very easy to hindsight in the markets is 20/40. It's
Yeah,
really good.
we're all brilliant.
Yeah, we're all brilliant after the fact, but you see, I'm like ADD 600. I'm not seeing a big breakdown here. I'm not seeing a big breakdown at all. So I'm very specific here. ADD is not letting 1057.
Mhm.
ADD is not letting up, and Volt is back to the top. I would prefer stronger bounce, but so far we're just chop chop. I want to see strong bounce on a daily. The longer it takes to bounce, the less odds are for a bounce. But again, Volt is back to the top. ADD is not letting up. So again, this is really important for everything we do. I'm looking at this at all times, and market internals really do help me decide when I want to go long, short for anything we do. Okay, so I want to talk about the pit. We had a lot of questions, a few things that I want to talk about. First off, somebody was nice enough to put this in a Word doc and summarize it for us. So I'm going to post it here for you guys. You can have it, but I'll go through this. But this is like and Matt, after I post it here, can you post it in the YouTube channel, please?
Yep.
All right. Just go Zoom. You'll be happy to hear, Raleigh. I have not turned on the chat yet. I do that right now. Good day, everyone. By the way, how did you guys do on the Google trade I gave in the pit and the Gap trade I gave in the pit? How did those work out for you? Here, hold on to this while you're answering the question. Let me know how that worked out for you guys.
Now, Roger, what you're posting here, you said one of our customers basically just transcribed all this here.
This right here, the sheet. Yeah, this is
Yeah,
a sheet that remember we did this on Tuesday, I think.
yeah.
Yeah. Yeah, so they transcribed it into a nice doc, easy to read
Oh my
doc.
gosh, some people did well with the Goog.
Oh yeah. People did really well with the Goog, and people did really well. Gap gave us about 60% time spread. It gave us 60%. Even though we were looking for 2025, it gave us 60%.
It gave
And
us
Google did
60.
about
Yeah, yeah.
60, and Google did about 60% as well.
Well,
Gave us
it's
about
kind of
5%.
interesting because I know, Roger, you have been a little bit concerned about retailers. How are
Yes.
retailers going to be? And when Ross and Gap came out and Walmart came out doing well, at least from that perspective, that was a positive sign.
Earnings have been coming out better than expected. It's
Yep.
not a stock market issue. It's a economy issue. And people have to understand that the stock market is just part of the economy. If it wasn't, then the stock market would just be flat when the government had a shutdown. You understand? And it
Yep.
didn't do anything. So you gotta learn to kind of compartmentalize it. Ooh, wow. 244% on Google Estel. Wow. Ooh my. Vivek pre-market. So I've been really I mean, it seems like I've been really helping you guys out right when you need the help, which is what I'm here for.
Right.
Bill, we have, okay, so BBI, check this out. BBI, here's where we are with BBI. BBI is a time spread we took this week. Let me show you BBBI. BBBI dropped 25%. It was out of our range, which means the option that we sold expires today. The option that we bought with the money with the money that we used to finance our option mostly was financed by the option that expires today. Which means, so this is the ugly side of time spreads. This is the ugly side of time spreads. Thanks for bringing it up, Bill. We now have an option, a call that has 7 days till expiration that we're long. So if this stock moves over the next 7 days, we could still make money. That's up. Did I answer your question, Bill, regarding BBWI? That's why I like time spreads so much. They're the gift that doesn't stop giving. See, you lose money but you still have an opportunity to make money. You still make an opportunity to make money. Good. I'm glad you got that. So you see that's the ugly side of time spreads. You sell one option, you use it to pay for another option. This option expires. The option that this one paid for minus a little debit. And in our case, what was the debit? Let's see. We paid 13 cents for it. So we paid $13 a contract for it. Okay. Okay. So you paid 13 cents. So you need the option. What was the strike price? It was what is that? 2150. You need the 2150. We need the 2150. This one right here. Oh, excuse me, call. We need the 2150 call. I mean, this thing dropped 25% of its range. Right here. We need this call right here. Right here. This call that's going for 0 to 10 bid, right? If you wanted to pay 10 cents. Oh, it's got little contracts on it. Look at that. We need this to be worth 13 cents by next Friday. If it's worth 13 cents by next Friday, we're whole on the trade. That's the ugly side of time spreads. I take that ugly side any day of the week and twice on Sunday. Not bad, right, Raleigh?
That's terrific.
So you got today and 5 more days for this stock to gain. And if this stock starts moving up a little bit, I promise you this will be worth 13 cents. My screen is being shared, right? You could see
yes, it is. Absolutely.
Okay, yeah. Okay, good. Just wanted to make sure. So yeah, I'm okay with that. I'm okay with that. I'm okay with that scenario. I could totally live with that scenario. Okay, so let's go back to this sheet here, and let's review before we get into the pit, because I want to answer some questions. Let's review what kind of trades did we do in the pit. So remember what I told you guys about the pit. The pit is me expressing myself. It's me being me. It's me trading the way I actually have traded for decades. Okay, and I mean decades. There's nothing new in the pit for me, but there's a lot of new stuff for you. One of the things that I'm teaching you in the pit is you don't always trade the same way. You trade depending on the context of the market. The context of the market drive they drive what we do. We don't drive what we do. The market drives what we do. Okay. By the way, momentum is shifting down. You heard those 3 bells? That's my Pro Trader dashboard curling right here. So whenever this curls up or down, I get the tring, tring, tring. You gonna take a short here, Matt?
Probably not.
All right. Yeah. ADD. We're not diverging. No, we're not diverging. ADD is really strong here. I wouldn't be going short right now. I would not be going short. Even though it doesn't look like a bad short, I wouldn't be going short here. Okay. So, and this really tells you, so when markets are humming, basically where they're moving directionally, they're not in the kind of cycle we're in right now. You could really make a lot of money on these right here, and you can make a lot of money on these right here. Pullback trades and directional trades, just directional trades and pullback directional trades. That's really all you need in a good market. And like, if it's a good market, we'll have 2, 3, 4 of those a day. Yeah, just driving them. But sometimes the markets get wacky. In other words, the market become like they are right now. Earnings, non-directional markets, okay? So when markets are non-directional, we start relying on these babies right here. Time spreads, which we do before earnings. Diagonals, which we do pretty much any time, but they're really good after earnings. And then we do straddles and strangles, depending how I feel about the stock. Sometimes I want to strangle the stock, and sometimes I want to straddle the stock. And if you ask me, Roger, what has the stock ever done to you that you want to strangle it? That's an old trading joke. What has the stock done to you?
Yeah. What's that all about?
Yeah. Why are you so folks? I know that a lot of times you've been told, you've been lied to, and you've been told this strategy works in every market condition. No, it doesn't. No. There are strategies. I have strategies that have a 94% win rate, and they will not work in all market conditions. So you got to know when to strike, and you got to know when to go. It's the same thing as the example I gave you guys earlier this week when I said it's like going to a party. Okay, it's not who's the best dressed at the party. It's who's the most appropriately addressed for the party. If you go to a beach party and you wear a tuxedo, you're going to look like a moron. If you go to a wedding and you dress like you're going to the beach, you're going to look like a moron. Do you see the point? What you that's about as good of an example as I can give you. You got to dress for the occasion. You got to trade for the occasion. And in order to do that, you have to actually understand the dynamics of the market. Because if you don't understand that, you will not understand context. And if you don't understand context, you'll be telling a joke when somebody's pissed off at you, and you'll be, you'll be angry at somebody when they're smiling at you. You're not going to connect with the market. And what I'm telling you is 100% the way it is. I know what you're saying is, what? Real? Yes, that's how it works. That's how it works, okay? The strategy has to fit the current market environment. Also, you got to take implied volatility into account. Like, for example, options on the SPY that usually cost $2.50 or 3 cents are going for $7, $8 right now. Okay? You got to take everything into account. If you don't take everything into account, you're not going to get what you want out of this, okay? Which is why I spend so much time with you guys, because I'm trying to teach you context. Context. So first, to start off, these are the type of trades we do in the pit. We do directional day trades. We do directional swing trades. We do directional pullback trades. We do, and also pullback day trades, the VWAP. We do non-directional trades. We do straddle strangles. Straddle strangles is when you buy the same strike price and same expiration call and put, and you're looking for a move one direction or another, or a straddle where you take different strike prices to make it a little cheaper, and then you'll buy like the 10 call and the 7 put, but the expiration is the same. Okay. And you're looking, that's what you do when you don't know where things are going to go. When you're direction, and it's perfectly normal to expect market to not do anything or do something and not go anywhere. These are also the possibilities. Remember, markets go up, they go down, and they also don't do much, but sometimes they can not do much like this, and sometimes they could do very little like this. So you have to take into account all of that. Okay. And I teach you how to do all of that in the pit. We do all of that in the pit together. So wanted to first show you the type of trades we do in the pit. Now, let me answer some common questions that I've been asked in the pit that I want to answer for you guys. These are good questions, okay? All right. Really trying to help you guys out. I'm really trying hard to help you guys stay out of trouble and not make stupid mistakes.
Mm-hmm. And Roger, once again, if I'm just combining what you shared with us yesterday with what you're sharing with us today, I mean, folks, I hope you understand this is Roger's process that he goes through day in and day out.
It
and
is.
Once again, it's all designed to keep you out of trouble,
Exactly.
So once again, It's going to keep us out of trouble.
Yeah, absolutely. There you go, Murray. So I like that. Murray's funny. I'm glad you still have your sense of humor, Murray. So Murray got some cats. He just got 2 kittens, and they're adorable. Murray, do you mind if I post them here? Not right now, but on the Telegram channel. Let me know if I have consent, or if I need to sign a disclaimer, a consent form disclaimer. Let me know.
They have agents.
Agents, right? Let me know if I need to go to their agents. Let me know if I need to go to anyways. So all good. Okay, thank you. Okay, Roger that. So let me answer some questions. Okay, when do you decide on a debit spread versus a regular call or a put? Okay, when do you decide to do that's easy. That's really very, very easy. If I see an option that costs more than $10 or $11, then I would probably do a debit spread. And let me explain to you why. It's not just because it's cheaper. That's actually the last reason. I couldn't care about how much the option costs. I don't have a small account. I don't care if an option costs $100. It wouldn't mean anything to me. Here's the problem. Here's the problem, though. The problem is this. If you're going for a $2 move or a $3 move, and if you have an $11 option, you're going to get 10, 20, 30% in the best case scenario. But if you have a debit spread and you have a $3 move, you could make about 50% on that, you see? You can make a lot more because you're only spending $2.50. So you're going to get the same size move, but the leverage on an $11 versus $2.50 is I'll post them a little later, and after this I'll post them in Telegram. I've been meaning to post them. I'll do that after we're done here. So they're adorable. So you're getting a lot more leverage. You're getting a lot more leverage. So to give you an example, just to give you a hypothetical, okay? Let me just give you a hypothetical. Give me an expensive stock. What's a good? I'm a little fried. It's Friday. Give me an expensive stock.
Like Nvidia.
Nvidia's not that expensive, actually. It's only
not?
Netflix.
No, Netflix.
Netflix,
Thank you.
there we
Netflix. No, Netflix split, Matt. It's split.
Oh, did it just
Split.
split?
They all split. All these stocks split. Lilly. Yes, Lilly. Thank you. That's a good one.
Costco's another one.
Lilly's a good one. It's perfect. So let me give you a scenario, okay? So here's Lilly. You come here. Okay, Roger gave us a signal on Lilly. All right. Okay. Market's looking good. Let's see. Let's say we go out. Can't go 7 days. We're gonna go 14 days out. Delta of 70. What? $44 and I protest. I want my money back. Right? Something like that. I'm trying to be dramatic. No, this is perfect. But look, let me show you something. You can go right here to 0.50 right here. You can buy the 1060 and sell the 1065, and you could do this for less than $2.50. And then for every dollar that the stock goes up, you make 50 cents. It's not bad, right?
It's not bad at all, yeah.
And you spend $2.50 per contract, not $40, $2.50. Not bad, right?
Yeah, because at 40, you're just going to be buying a call. So it's
Exactly.
a directional move. That's what
Right.
you're banking on, right? Yeah.
Right. But a debit spread, it's a debit spread. You have $5 profit potential. I'm not even looking for $5. But look, and all you have to do is start not at 0.70, but at 0.50 and go down to right here. So yeah, you could play with the big boys. Exactly, Michael. That's a very good point. No, that's a very smart way of looking at it. You could play with the big boys. And that's exactly right. Or let's say you want to hold on to this trade a little longer. And if you're doing a debit spread, I would rather you buy 8 to 14 days out. And if it expires, whatnot, we've had 25 trades expire. No, we had about 12 expire in the pit and 400 that made money. But nonetheless, let's say it's not going your way. You're going to lose $2.50 a contract, not $44 a contract.
Right.
Let's see. Dave just said, Google trade from yesterday, purchased the contract with a debit spread. Okay, well, here's an example. Let's look at this. Here, it's on the chat, guys. Open the chat. You could see it right here. Expiration 11/28, which is exactly 8. It was 8 days yesterday. He at $122 per contract and sold at $175 and made 43%. You know what he would have made? You know what? Why not a put credit spread? Mark. Let's watch the movie that I'm presenting to you, not a different movie right now. If I was talking about weekly cash flow, we'd be talking about put credit spreads. We're talking about directional trades. We're talking about the pit right now. Let's stick to the topic, okay? I could write, why not this? Why not that? Why is my mother a female? Let's not go there, okay? Let's focus, okay? Okay, so he would have probably made about 12%, 13%, but he made 43%. That's pretty good gain. So debit spreads allow you to take pit trades with a very small account and still get your nut, still make your nut, okay? And that's a perfect example right there. That's a perfect example. So you don't always need Derek says, I did a spread on Google too. The options were a bit pricey, got 18% this morning. There you go. There you go. Okay. You know, why this, why that? There's a lot of whys. So my point for all of you here is, debit spreads give you a really, and if you don't know what price to pay, just go start at the bid and go towards the mid, or just go for the mid and you'll be okay. And just go 8 to 14 days out and you'll be okay. Omar says, I like put and calls. Yeah, put some calls are great too. Underlying is great too. Look, there's millions of ways to skin a cat. But again, if you have a small account, a debit spread is your best friend. So I do debit spreads when the options start getting over $10, $10, $12. That's when I start looking at debit spreads. How do I decide? Okay, next question. How do I decide if it's going to be a swing trade or a day trade?
Yeah, that question is asked a lot, Raj.
Yes. Well, here's the answer. I don't know.
Next.
All right. The answer is I have no idea. No. I do have some idea. The answer is the answer depends on first of all trades start out as swing trades. If it's not a swing trade, I'm not going to be looking at it. If you notice, when I look at my pit when I look at these,
like you did yesterday when you're going through the scanner.
See, when I'm looking at the scanner, I'm looking at 5-minute trends, right? But I'm not looking at the 5-minute chart. I'm looking at the daily chart. Because if I can't find a daily stock here that looks good, what the hell do I even need to look at the 5-minute for? Mm-hmm. So everything starts out, Rod, we're not talking about time spreads right now. Folks, we're talking about directional trades. We're talking about questions regarding the pit directional trades. The first question was, when do you do a debit spread? When you do a trade? The second question, which I'm answering right now, is very, very simple. How do you know if it's going to be a swing trade or a day trade? We're not talking about time spreads. We're not talking about credit spreads. We're talking about the pit directional trades, and I'm answering questions. Please go out of your way not to confuse me instead of trying to confuse me. Okay. Thank you. All right. So
on that note, Roger, please close the chat.
Yes. I'm going to close the chat.
You can just focus on this.
Yeah, thank you. I don't even know how it does me.
How did that happen?
Trouble. I always get in trouble. Like yesterday, I didn't even open it the whole session, and it was great. So nothing for worse for me than that chat. Because I love socializing with everybody, and I want to get to know people, but it's a distraction. Yes, I know.
We'll have plenty of time for questions, folks. We'll have plenty of time for questions.
It's a double-edged, I'll tell you, man, it's a double-edged sword, Raleigh. It's a double-edged sword. All right. So okay. So the first question is, there is no single answer. There is no single answer. I wish there was. If there was, I'm not trying to make your life difficult on you. But the way I look at trades is differently than most people. The way I look for trades is, how much moolah can I get out of the trade in the shortest amount of time? If I'm going to take a risk for 5 minutes, 10% is amazing. If I'm going to take a risk for 3 days, 10% may not be that great. So the way I look at trades is, how much money can I get in the fastest amount of time? So when somebody says to you, how much money do you make? Your follow-up should be, in how much time? Because a person can answer that question in my entire life or in the last 5 minutes, right? So I'm always looking at, how much can I make for my risk in the shortest amount of time? Because, well, I'd like to think that my time is worth money, and I want to maximize my time. And I want to minimize the time I spend in the market. Your goal should be to minimize the time you spend in the market. That's how you avoid those big drawdowns. You understand? All right. So the way I look at it is very, very, very simple. The way I look at it is this. If I can get my nut from the trade within a very short time, I'm going to take it off and move on to something else. If I can't, I'm going to hold on. Okay? Now, how do I do that? So, is the market trending? If the market's trending, I'm more likely to make it into a swing trade. Is volatility down or up? If volatility is up, more likely going to make it into a swing trade because now I have to cover my nut for the option because the option is going to be twice as expensive. As I said, right now, VIX is 25. They add the money option on the SPY is not $8, $9 or $7 instead of $2.50. It's like food prices. We have inflation on option prices. So is VIX inflated? How early is it in the day? Is the market trending? Is the stock trending? Does it have high volume? Does it have average volume? All of how fast did it make its move? These factors is what decides whether I'm going to be holding the position overnight or if I'm going to be holding the position over the day. If I can make my nut fast, I'm going to do it. Now, certain trades start off as swing trades and they have a lot of they just begin breaking out. So if you see me saying something like this is an A line, let me show you. It's easier to show you. So here, let me give you a good example. Here's a good example. See Johnson & Johnson? See how extended Johnson & Johnson is?
Yep.
I would never swing trade this. But this is a great scalp because look, it's on fire. When you see stock penetrating this level right here, it means it's really hot. It's red hot. And this stock has just been on fire. So if right now, this minute, as we're sitting here, if the market was to have one big fat candle down, and if the tick didn't downtick below 5,600 and this fell down to the VWAP, I would take it without any hesitation. And I would get out of it when it comes right back here. Because it's doing this. It doesn't have any staying power, you see. It doesn't have overnight staying power. But let's take a stock like...
By the way, Jason just posted that he scalped Johnson & Johnson for 75% today.
And there you have it.
There you have it. Yep.
But look at this stock. It's a little choppy, right?
Okay.
But
yep.
you see if the stock was here, the more distance I have to this line, the more I'm inclined to swing trade the stock. The less I have, the more the stock is closer to the top or at the top, or the bars are getting bigger, the less likely I am to swing trade that stock.
Mm-hmm.
So whether I swing trade a stock or day trade a stock is largely dependent on where the stock is in relationship to these levels. So if I'm buying this stock right here, I don't think here, definitely not day. I would definitely not swing trade it here. Here, I'm not sure, maybe one way or the other, because most of it is still inside this range. But if I see a stock getting really uppity and breaking for more than one day here, that's a great day trading stock. That's a great pullback to the VWAP stock. But that's just not stock I would want to hold long term, unless I'm stuck. Okay, and even when I'm stuck, I would be very mindful that the 8-day EMA is the 15-day EMA is kind of far away.
Sure. Now, Roger, once again, as you're setting this up and you're looking to day trade or to swing trade it, really from your standpoint, when you're selecting an option on this, you're still looking for a delta of 70. The difference is if you decide to day trade it, you're looking 4 to 8 days out, right? And if you're making a decision to swing, you're looking at what, 3 to 4 weeks out?
Potentially, even though I don't think we've ever had a trade in the pit, maybe one. AbbVie, I think the average hold time even for a swing is like 3, 4, 5 days. You folks can tell us, but we don't really. Look, we've had 25 losers. I could look at them, but I would say that 2, 3 days would be the average stock that I'm stuck in. But you see, if you hold a stock for 3 days and you have 8 days till expiration, you're going to start losing. You're going to make money on the trade, and you're going to lose money or just break even. But if you have 3 to 4 weeks or even 5 weeks, you're going to make money on that trade.
Yep.
So
that's why I was saying a day trade would be 4 to 8 days.
Exactly.
A swing trade would be like 5, 6 weeks. Okay.
Exactly. Yeah. You if you're swing trading, I've never once in my life met a swing trader who regretted buying too much time. on an option.
That's true.
I've never in my life met one trader who said, you know what? I am such a this is a big mistake. I'm not making enough money. I didn't buy enough time. No. But do you know how often I hear I didn't buy enough time? So for every trader who will say I bought too much time, you'll have 10,000 traders saying they didn't buy enough time. So do you see what side you should be on?
Yeah.
Buy yourself a little extra insurance policy if you're doubtful. Now, there's a downside to that. There's a downside to that. And let me explain to you what it is. If the option is not that liquid, okay, when you go the further you go out, like 3, 4, 5, 6, 8 weeks, it's going to have less liquidity, and you're going to have more liquidity in the near term option. So sometimes, and this is why I tell people, just buy the 8 to 14 day debit spread for $1.25 or $2, and if it expires, just buy another one 8 days later. See what I'm saying, Raleigh? It's just it just makes more sense to do that than going 40 days out and spending $12 or $15. Just do that. Just buy a debit spread for $125, one contract, or $250 or less, and see where it goes, and start working from there. After a while, you're going to develop a feel for this stuff. Trust me, you will. You will. I'm giving you hard and fast rules, but we are dealing with a very, very gray area. A very, very gray area. Okay. So now one more thing I wanted to tell you. If I am day trading, volume is going to become a lot more important to me than if I'm swing trading. I don't look at volume when I'm swing trading. Now, I probably shouldn't say that because you guys will be like, oh, I don't have to look at volume. You should always look at volume. But honestly, I've never once in my life, and I've asked Matt this too, and he said exactly the same thing. I've never once found volume to be helpful when I'm swing trading, and I'll tell you why. Because how the hell do you know what the institutions are going to do tomorrow? They work they're in cycles. They don't work continuously and then stop. They work on a day, then they stop for half a day, then they start up again. So you don't know when that volume is going to come in unless it's coming in right now. So it's hard to predict that volume is going to come in 2 days from now, 3 o'clock in the afternoon, or 4 days from now. So if you're holding a trade for 7 days, how in the world are you going to know if volume is going to keep coming into it? You don't. You don't. So using volume when you're swing trading is just it makes no sense. And I've never done it, and I've still been able to achieve an 80% win rate in A-Line and Stealth Surge and all those programs, and more so even in the pit without ever using volume. But I do use volume for day trading, and I find volume is very useful for day trading. So there are nuances. And you will learn to identify these nuances. The biggest one is how far are we on fire right now? Is Roger buying something that's on fire right now, or is he buying something that he anticipates to be on fire? If I'm buying something that's on fire right now, the odds are it's going to be a day trade. If I'm buying something that has a little room, that if I say this may be a swing, then more, or if you see me buying something the last hour of the day, more likely than not, that's a swing trade. So early in the day, fast moving stocks, a lot of volume, price breaking out, number one on my Pro Trader dashboard. Those are day trades. Later on in the day, less volume, more looking like A-line type of trades. Or if I say, hey, this is a beautiful A-line trade, price target about 2 points above where we are right now, or a couple of overhead right here. Those are great. Those are really, really good swing trades.
Yep.
So before I go on to the next segment, I promised to help you find some trades. So let's take a look. Here are some trades these are stocks that I found earlier today. I don't know how they're looking, but let's look at them right now, okay? So first is coin. So breaking down. Now, this is a perfect example. I would not swing trade this stock, okay? I would not swing trade this stock. But if right now this stock broke with volume below this area, the VWAP, and yesterday's low, I may be tempted, and it went negative, I may be tempted to short it. for a day trade. Okay, look at this trend. But let's see how it's stuck to this wall.
Yep.
It's not here coming down. It's stuck to this wall. That's not a day. This is not a swing trading type of stock. That's a day trading stock. Okay. Okay. Next one, Oracle. Now, why do I like this stock for a short? Because it just broke the 200-day moving average. Clean break of the 200-day moving average. Looks like Larry Ellison is not going to be the richest man in the world for too long, right? Right, Raleigh?
You might have to sell one of his islands.
Exactly. Or one of those buildings in Malibu. The guy owns like 3/4 of Malibu. Can you hook me up, Matt?
Yep.
So I like Oracle. Or again, would I take this for a swing trade? No, of course not. It's way overextended. See, but if this thing breaks the VWAP and the market right now starts breaking down hard, and if on the Pro Trader dashboard the volume is pretty good, I wouldn't hesitate. I would not hesitate. Again, I'm just trying to show you guys a couple of different, and I can't have, I don't, the chat's closed, so I don't know if this is helpful.
Yeah.
But,
Oh, yeah, it is.
I'm hoping that it's helpful. Palantir, let's look at Palantir. And obviously, a lot of stocks are overextended since we hit the 100-day moving average today on the SPY. So, but this is a great, now this is a, I love follow throughs. Thank you, sir. This is a great, I love follow throughs, but not for swing trades, for day trade. Now, yesterday, when this stock started coming down, when it was right here, that would have been a good swing trade right here, but not here. Too late for a swing trade, but a good day trade. So if I find that this doesn't break, this is yesterday's close, that we don't break yesterday's close and we start coming, this is all hypothetically, and start coming down here, I may take this as a short. These stocks are on my watch list, and I'll refresh the watch list for you in a minute. CRM. Again, same thing, breaking down hard. Upstart. Upstart looks like it could still be a swing trade. Actually, the funny thing is it could be a swing trade right at the 8-day right here with the intent of it coming back down. So this could possibly be a swing trade here, although I wouldn't do anything with it right now. And I don't want to take swings right now unless they're really good, and that would be towards the end of the day. Okay, right here, day trades. So these are all shorts. And again, and think about this. Every short on my list, notice it's overextended to the downside, which is telling us that the market is overextended to the downside right now, which is exactly what I've been telling you. So we can use this to give us a good gauge of what we're seeing in the market. The market's, by the way, recovering beautifully. This is classic right here. We just need to see it go higher, and over the next few days, start coming up here. This is where we want it to be. But this is a good start.
And this morning you said, Roger, if that bar closes and makes up 60% of what 60%. It lost yesterday, that's a good sign.
Yeah, which would put us it would put us somewhere around the 8-day, which is what we want. We want to get above the 8-day as fast as possible and above the 50-day as fast as possible. That's this and this. That's what we want. And so far, so good. That's a pretty nasty bar. It needs to be erased fast.
Yeah.
Okay. Now let's look at longs. I like longs. Let's see. Okay, Guardian Health. That's a beautiful stock in a beautiful trend, outperforming the market right now. I wouldn't chase it right now, especially not this time of day. And I don't know if volume is okay. It's not bad. This is very nice. This is very, very nice. A pullback, maybe a HA reversal would be nice, but more likely a day trade. Let's look at some more. Google. I still like Google. I said to my guys today, if Google comes down here a little bit, I may want to take it long again. And now Google I would take for a swing trade. See how Google is not up here? And when it comes here, it pulls back down. See what I just said? I wouldn't mind taking Google around here. I just said if it comes back here, I wouldn't mind taking it again. Here, not here, here, around here somewhere. But like 292-ish where our entry was yesterday. The VWAP right now is right here. It's below the VWAP, actually. So we'd see it there. All right. That may be a good swing. MAR. Ooh, well, earlier today, when MAR was right here, it was a very nice swing. And I had it, and I gave it on my watch list. Now it's no longer a swing. Now, Roger, would you buy a stock this overextended? If I'm day trading, you better believe it. There's institutions piling into this stock right now. They're piling into this stock right now. Remember, our job is to identify what institutions are doing. This thing is outperforming the market right now. Would I prefer a pullback? Yes, but that's a strong stock. That's a good day trade right now. And I promise you, volume is coming up. Stock is up 12%, 5%. Volume is coming into this stock. Here, I'll prove it to you. Let's see. Actually, how far are we done with the day? About 55, 60%?
Just over 50%. 12:30 is half the day.
Right here, 59. So we're a little bit ahead. We're a little bit ahead. I would have expected to see more volume, but we're a little bit ahead. Okay. Let's continue. All right. Sorry about that. I digress. Shoe. Somebody give me a shoe. Now, this is a stock you could still swing trade. Now, notice it's coming down to the VWAP. This may give us an entry signal. I like this stock. Hold on, let me... crossing up one day. All right. I like this stock. I may want to take this stock. It's very strong. Although it has been underperforming the market the last hour. See, I'll show you. Look. Now, again, I could see all this with my eyes. See? But a lot of you may not be able to see it with your eyes. And that's okay, too. That's okay, too. Ooh, kind of getting time. I didn't realize what time it was. All right, let's go back here. Shoe, Texas Instrument. I mean, excuse me, TJ Maxx, not Texas Instrument. TJX, not TX. Texas Instrument. TJ Maxx, retailer. Earnings are good. Would I day trade this? Absolutely. Would I swing trade this? No way. And no. We're already here. I'd want to swing trade it around here. Okay, unless I'm stuck. This is a beautiful one. Spreads are wide. I would still consider a swing trade in this stock. Barely, but I would still consider a swing trade in this stock. It's not, it's very, options are spready and expensive today. But I would consider a swing trade. Look at this trend. That's a nice trend. But you see what happens when it goes over here? It tends to come back down here, Raleigh.
It bounces
see that?
right off, yeah.
So you don't, but see, here's the thing. When it gets there, it tends to stay there for a while. It tends to like grab it, like it's like a magnet. So it gets an extra burst of energy here, but then it dies off. So it's good for right now, but not good for later. This is like you going to a bar. This is like you going to a bar at 10 o'clock at night. It's good. It's going to be good from 10 to 1. And then after 1 in the morning, everybody's going to get drunk. And it's just, this
So
is your
when you
window.
say stuck, you're just basically saying the price tends to go up there and then it just bounces a little bit sideways here for a while.
Yeah. It gets excited. It gets excited around here. And
Yeah.
then it just comes back down. So you want to day trade it while it's exciting, but you don't want to overstay your welcome. That's what I'm trying to say. All right, let's continue. A calm. That, my friends, is a beautiful swing trade, which is what I wanted to end today with. Now, why? We broke above. See how it stays here a little bit? It stays hot. That's good for day trading. It comes down to the 8-day EMA. It bounces around, and then it comes up. And it's a beautiful A-line. Matt, what did I tell you about a calm earlier today?
You did. You said to check it out.
Didn't I say it was a beautiful A-line?
Mm-hmm.
Beautiful A-line. Do we have any questions before we move on?
No, I think it's, once again, Roger, it's been a terrific presentation. A number of people continue to write in how well they've been doing today as a general statement. But there are some questions that did come up. Let me see here. So when you were talking, this is a quick clarification. When you were talking about the spreads, Michael said, so a debit spread, you buy a delta of 0.5 and you sell a delta of 0.47. Is that correct?
It doesn't have to be 0.7. Your anchor point is the 0.5 delta. The other one is just depending on the price. The strike price you sell should make it so that you're paying. Here's the rule of thumb. Your anchor point should be 0.50. Okay, that's what you buy, 0.50. What you sell is dependent on what your premium is versus the spread. You're trying to get the best ratio of 50% or less of what you pay versus the spread.
Versus the
So
spread.
you have to find the debit to give you that ratio. Either the next one, if not, go to the next one and see, okay, am I paying 50% of the spread? So if the spread between the two strike prices is $5, don't pay more than $2.50. If the spread is $2.50, don't pay more than $1.25. If the spread is $1, don't pay more than 50 cents. Your best ratio, and I don't really look for the best ratio. I usually go for the tightest spread as long as it's below 0.50. And usually it is. 75 to 80, 85% of the time, it'll be below 50%. Okay?
Excellent. Another question that just came up, once again, a lot of people did extremely well on Google. And
Yes.
Tony basically said, so Roger, what helped you find Google? Is that something that you saw in the scanner, in the
Yes.
Pro Trader Dashboard scanner? It served that up?
It was a combination. It was on the stock fetcher in the morning, and then it was top on the Pro Trader dashboard. So it was a combination of the two.
Outstanding. And I
Yeah,
mean, seriously, people crushed it with Google.
they did. They did. By the way, folks, add ANET to your short side. I may want to go short. Um,
ANET?
yeah, ANET. The stock breaking
Okay.
down, went up to the VWAP, now having trouble again, and it looks like it wants to come down again. Let me just look at it real quick on a daily. Oh, what a crappy stock. What a crappy.
I sense you're on the fence about this stock, Raj.
Oh, absolutely.
Yeah.
What a crappy piece of garbage stock. Uh, volume is low. Oh, it's got a lot of volume. Yeah, I really like this stock for a short. You know what? I'll wait a little bit. I don't want to manage anything right now. I really like this for a short.
Okay.
I'll tell you what, folks. I'll just give it to you as a bonus trade. How about that? Since we're all here together, how about I give you a bonus trade before we move on? Here, let me do it right now. Go. Go with. All right, we'll have some fun here. Go to December 5th and buy the 118 and sell the 117 and do that for 50 cents or less. Okay, buy the 118, sell the 117 strike price, puts December 5th expiration for less than 50 cents. You're going to be on your own here, okay? I'm just letting you know. If the market drops, this thing will come down to about 115. Right
So
here.
are you putting that in Telegram, Raj, or
I'm just giving it to you. I'm just giving it to folks here as a bonus if they want to take it.
Okay.
And with the idea that this will come down to here. This is a day trade. This is a day trade. This is not a longer term trade. So if you really want to go crazy, you can buy a lottery trade for pennies on the dollar that expires today. You can buy the 118 that expires today for like $1.35. I mean, it's cheap, but I think this is going to come down. Especially if the market comes down right now, this is going to come down all the way from 117.20 to about 114, 115.
Roger, if it's not a hassle, could you write that in the chat?
Yeah, sure I can.
That'd be great. Because, or if somebody did record what Roger was saying, one of the things is this, guys, I hope you always have a pen and a paper with you. Okay, because you need to write these things down. But Roger's going to go ahead and put this there for you.
December 5th expiration, buy 118, sell 117, less than 50 cents. There you go. This is a bonus trade. Don't email me about it. I don't want to. I'm just giving you guys a bonus trade out of the goodness of my heart because it's a Friday, and I don't know how it's going to go, but yeah.
And
never know
before we move on to other things, several people said, "Hey, Roger, could you give one last look at the SPY?" tell us what you think about the
Sure, I
SPY.
can. I've been looking at it this entire time. It's actually
I know you've got it on one screen.
right here. It's right here. Yeah, these are puts, folks. I don't know where you've been the last hour, but these are puts. Yeah. The stock is going like this. It ain't calls.
Yeah, as you said,
Yeah,
this is not a pretty stuff.
I like the SPY, but if we don't get past this right here in the next day or two, we're going to consolidate, and that's going to be a big problem. So we need to here's what I'm going to okay. You know how certain people get to the hospital, they get into a coma, and they say we need to get them out of the coma really fast. Every day that we don't get him out of a coma is one. It's going to his life gets worse. That's where we're at here. We need to erase this bar as fast as possible. The longer it takes us to erase at least 60% of this bar, which would put us right here, the worse it would be. I'm just telling you right now. And folks, don't get so bullish right now. We're not out of the woods just yet. We're not out of the woods just yet. We got a whiles to go. This is a good start. That's all this is. This is a good start. But the stock ANT has been going down all day today, even as the market's been recovering.
Yeah,
So,
exactly. And on the SPY, Roger or Matt, do you see anything on an intraday basis that looks interesting?
I see something on an intraday basis. There's a problem. I see this coming down, but maybe to the VWAP. Because the internals are really strong. We're at positive 1680 right now. So the only problem is VIX is still at 24, but internals are really strong. Volt continues making higher highs. There's no divergence. So I'm seeing a down move right here, but I don't know how far down it'll go, maybe to the VWAP. So overall, in the short term, in the very, very short term, I'm bearish. In the longer term, I'm bullish. Hopefully that makes sense. Murma says ANET already up 10%. Well, there you have it. Remember, it's a day trade. This is not a long-term trade. This is just a day trade. There you go. Cyrus, you've been seeing bull traps in the SPY since I met you 8 years ago.
Exactly.
All right.
All right. Well, Roger, thank you for that terrific presentation. I know that we need to move on to the next section where you're going to talk in some greater detail, greater detail about the pit.
Yes, I'm going to give you guys more details about the pit. I hope you guys join me. The water's really warm and we've been doing really well. And just in the last 24 hours, we took 2 really nice gains in Google and in